So Palantir is going through a heck of a rally recently, and the question is, do we want to sell now and take our profits, or should we hold it and buy more? Well, let's find out. So before I walk through the 4Ms, what I want to do is give you a little context on the history of the company. This will be helpful for some of you that aren't quite sure what Palantir does. So back around the year 2000, the few key players at PayPal included Peter Thiel, Nathan Gettings, Joe Lonsdale, and Stephen Cohen. They were having issues with fraud. It's just always going to be an issue with online payment processors. So again, around 2000, they started working on this product to get ahead of it and detect fraud and figure out where it's coming from. And the issue was fraud was over 1%, which is considered really high, especially for big payment processors like PayPal, Square, Adyen, the list goes on. So they started working on this product to bring that fraud down below 1%. It was sometime in 2000, they brought it down to 0.55% and then down to 0.37%. This was in 2001. Then they officially founded the company in 2003 and they brought in Alex Karp. He is still the CEO as of today. I'll fast forward here a little bit to give you context on the company. The name Palantir is actually from Lord of the Rings. It's actually named after the magical Palantiri seeing stones, which essentially allow you to see other events around the world. I'm a total movie nerd, so I appreciate that. And then moving ahead here to 2009 and 2010, Palantir was used to uncover GhostNet and Shadow Network, and these were China-based cyber espionage companies they're pretty much hacking over 1,200 computers in over 103 countries, including the Dalai Lama's office, a NATO computer, and various embassies around the world. So this gives you a little perspective that Palantir is used, yes, to detect fraud and also get ahead of like cybersecurity events, which is definitely something we have to worry about today. Then jumping ahead to 2013, this is 10 years after the company was founded. Alex Karp was interviewed asking, hey, are you going to take the company public? And his answer was no. And I really appreciate that. But there's an issue out there with companies, especially tech stocks, that they'll go public like 2 or 3 years after they're founded. And the issue is they have a really weak income statement, cash flow statement, and balance sheet. And it's actually irresponsible to investors like you and I. But they get to pocket a big payday. I'll give you an example here. So when a company is going public, you have your early investors, which can be angel investors, venture capitalists, sometimes private equity. They're in early. And then you have your founders. Those are the other shareholders in the company. When a company goes public, those people get a big payday, but it's not always responsible for the retail investors. Again, like you and I, we're left with the short end of the stick. So these people get to ride off to the sunset, driving their new fancy sports car, and we're left hanging. Because what happens is that first earnings report comes out, and we find out the truth. We find out that their financials are really bad, and then the stock falls off the cliff. This happens all the time with new IPO stocks, so be really careful with IPO stocks. This is a different story. Instead of waiting 10 years, Palantir actually waited 17 years. It went public in 2020. So founded in 2003, went public in 2020. That's really smart. That's a really long runway to build up strong financials so the company is responsible to investors like you and I. I love stories like this. You want to wait, and you want to wait a little longer. They did a great job. Okay, now let's dive into the 4Ms. So jumping over to Tykr, this is where we always start with the math part of investing. That's a margin of safety. So right away, we can see the stock is on sale, score of 61 out of 100, and margin of safety of 90%. What we're looking for with the score is something that's 50 or higher. That shows strong financials. And then with the margin of safety, we also want to see a 50, in this case, 50% or higher. To get 50 and 50, that equates to an on-sale summary. And achieving on sale is actually hard to do in Tykr. Most stocks are red or overpriced. So the financials here look really good. And then if you scroll down, I have the chart here showing the 5-year in this stock. This is really impressive and very rare for a new IPO stock has remained on sale for a very long time. That is very difficult to do. But the big reason why this stock is rallying is actually because of if you jump here to the earnings calendar, you have your EPS events, kind of like what I was talking about with the IPO stocks. When you have your EPS reports coming out every quarter, you have your expected and you have your reported, and you want your reported to beat expectations. And when a stock beats expectations, that gives investors like you and I confidence, but more importantly, it gives large financial institutions, those are the ones that really move the market, it gives them confidence. So guess what happens? Stock price goes up. Of course, if you miss expectations, especially consistently, that's when the share price goes down. So in this case, the earnings report in February, they beat expectations by 50%. That's huge. That's a home run right there. And then you have the May expectations, or reported, you could say reported against expectations, beat by 25%. So that's also very good. And what has also happened is the stock transitioned from a negative EPS over to positive. That is really a key driver on why the stock is rallying. That's really critical when businesses go through that point when now we're not profitable to profitable. That's something that you and I are really investors should pay attention to. So with that in mind, the margin of safety in this case checks out. Let's move on to the meaning. This is the business model. So Palantir is an enterprise data analytics SaaS, software as a service. And what that means is at the enterprise side, you're signing contracts with government institutions as well as businesses, and those contracts can last 3, 5, 7, 10 years and longer. Enterprise, essentially, that's big business, it's big contracts, and it takes a very long time to make a sale. So if Palantir approaches somebody, it's not like they're going to make the sale tomorrow. It can take usually 3, 6, 9, sometimes 12 months or longer. But again, once that contract is secured, it lasts a really long time. Now, the enterprise data analytics, that would essentially, what that means is, we'll talk about the business side. So a lot of businesses out there, especially big businesses and those that work for corporate America or large corporations, you get where I'm going with this. There's a lot of wasted activity, repeated emails, repeated meetings, repeated steps, a lot of noise and a lot of waste. In other words, a lot of money being wasted on activities. Well, what Palantir does is help businesses become more efficient with marketing, sales, and operations. I'm really sensitive to all three. I've spent a lot of time with big businesses in all three areas, and I can tell you what, there's a lot of waste. So Palantir is coming in and solving that problem. Some of the customers on the business side include Merck, Airbus, Ferrari, Morgan Stanley, Fiat Chrysler, and the list goes on. And that product they use with that segment is called Foundry. The government product is called Gotham. And in this case, we understand they help with detecting fraud, preventing fraud, getting ahead of cybersecurity, getting ahead of terrorist events. They can track down communications and when there's planned attacks going on. This is why Palantir works with a lot of large government or military organizations, including the list here would be the FBI, U.S. Marines, U.S. Air Force, West Point, U.S. Army, and the list goes on there. So Palantir does work with the U.S. military and its allies solving those problems. Now, I will say this, I love the enterprise side on the business side because those contracts extend a long time, but based on my past experience, government contracts can go on inevitably. Yes, you can sign a contract for 10 years, but as long as you're providing a great product and great service, you're going to have a customer for life. This is very common because think of it like U.S. military. We'll dive in a little further. Let's say it's U.S. Marines. They're going to expose all this data and information to Palantir, and then one day they say, hey, we want to go work with somebody else. We're gonna cut ties with you and move on. That conversation usually does not happen. It's usually very sticky. Now, something else to pay attention to the business is, yes, they are a SaaS business, software as a service, but they also have a consulting arm that goes with it. So they have a team of people that work with each customer to make sure they answer questions, they help use the product, help improve the product, and at the same time, they can get ahead of conversations. If a customer is unhappy, they can start raising the questions. Hey, we notice you're unhappy. What can we do better? How can we make improvements? How can we keep your business? Now, that's a big lesson learned. For those of you out there who are trying to create a business, especially a SaaS that's B2B, you want a strong customer service or consulting arm that makes it stickier because you want to keep those customers and you want them staying with you year over year and, of course, hopefully spending more. And with that comment in mind, with the latest earnings report, Palantir did report 118% year over year expansion revenue, which essentially means that customers are not only staying, but they're spending more year over year. So that's really smart. So that's the meaning of the business. This is a very, very strong business model. I actually have been an early investor with the company mainly because of the business model itself. It's one of the key factors here. So the meaning in my world, that checks out. Let's move on to the moat. So here are some of the competitors. You have Alteryx, which is overpriced with a score of 28 out of 100. Then you have Snowflake, which is Watch, and their score is 50 out of 100. Then you have Datadog, which is overpriced with a score of 39 out of 100. Then you have Splunk, which is also overpriced, score of 39 out of 100. And then I put IBM on the list as well. They do have some data analytics tools in their model, and they are also overpriced with a score of 45 out of 100. So most of these businesses are not doing too well in comparison to Palantir. Palantir is over and above. The stronger business model just seem to be running a lot more efficient, better with their capital allocation, better with their revenue, their year-over-year growth. On all the key metrics we pay attention to, which include the revenues, net income, EPS, free cash. We also look at the assets, debts, liabilities, and equity. So in everything we're talking about there, they're making the right moves moving forward. And that's exactly what we want to see. Another thing to keep in mind is none of these competitors have any government contracts. Those are those sticky contracts like with the U.S. Marines, U.S. Army, and the list goes on. Those are really strong, steady revenue businesses. Like I said, they can be businesses for life. And these competitors do not have that. They're all focused on the enterprise corporate side. Okay, let's move on to the last M. This is the management. So in a previous video, I talked about, I was a little critical of Alex Karp, mentioning that they profit during conflicts. This was really during the time when Russia and Ukraine were the latest news. And although that can be a nice benefit of this business model, that's not where I would focus. I would not say, hey, we're going to profit, we're going to make money for our investors when the world, goes to war. That's not a smart conversation to have. So I'm a little critical about that. What I do like is the focus on helping businesses run more efficiently, because that is an obvious need. And I also like the fact that, I'm really sensitive to cybersecurity. I also invest in Fortinet. There's a lot of cybersecurity companies out there, but cybersecurity is a big deal. And if Palantir can help get ahead of events out there, I think that's a big focus as well. So I would focus my conversations, when I'm being interviewed, I would probably focus more on, efficiency of businesses and cybersecurity. But he did not go into detail about that in the latest report. What he did focus on, and I really appreciate this, is he said that they're not everyone's cup of tea. And if you don't like Palantir, don't work here. And I like a CEO they're not leading a business to make everybody in the world happy. That's not the goal. We have to remind ourselves, especially as employees of businesses and investors, that it takes a really long time for a business to find product market fit or service market fit. Essentially what that means is it takes a long time to make money as a business. And usually you're solving one specific problem and it kind of expands from there. Well, it took a long time for Palantir to really ramp up, most of the 2000s to really get the revenue machine moving. And whether we like it or not, they do serve the U.S. military as well as its allies around the world. And if employees don't like that, I definitely agree with Alex. Go work somewhere else. This company has found a niche in serving those customers and solving problems for them. And it's doing the same thing with big businesses. It's not just going to pivot overnight. We're going to go do this or do that. Business doesn't work that way. So overall, I think Alex is doing a great job. He's, again, not trying to make everybody happy. He's really hyper-focused on his customers and continuing to build this business. In summary, the 4 M's, I would say all 4 M's check out. So you've got that margin of safety on sale within Tykr, which is great. It's a great business model. It's really strong against the competition, and it's led by a good CEO. So a big question you may have is, where can the share price go from here? So as of today of the recording of the video, it is June 7th. This stock is at $16. where can it go? So I strongly believe this stock can go north of 100. The reason I say that is most of the competitors I listed, their revenue is very similar, but their share prices are all close to or north of $100. Now, you can't take stocks and compare them one to one because we're dealing with outstanding shares out there as well. But this stock is definitely on sale. There's a lot of upside potential, and I do plan on buying more. I do foresee over the coming years seeing this stock going north of $100 for sure. I'd love to hear your comments. If you like this video, hit that like button. If you want to see more like it, hit that subscribe button. And if you want to learn more about investing, go ahead and check out Tykr.com. All right, we'll see you in the next video. Bye for now.